My name is Mark LaMonica. I'm the product manager for Morningstar Premium, morningstar.com.au. We'll get to Doug in 1 second, but first we have to go through our housekeeping items. So number one, anything that you hear today is general advice. We don't know anything about you, so we cannot offer you personal advice. We are going to talk about tax today. So important thing to note is that you should go talk to your accountants. But I'm sure we'll get into all of that. The other thing is, if you are in New Zealand, a couple special announcements for you that you can find our FAP on our website, morningstar.com.au. And if you are seeking out personal advice, you should go talk to a financial advisor. All right, we got through it. One last thing, we would like questions. So there's a Q&A button on your Zoom screen. There's also a chat function if you want to confuse me. But put the questions wherever you want. So maybe before we get started, Doug, would you like to introduce yourself?
Sure, no problem. So hi, everybody. My name is Doug Morris. I'm the CEO of Sharesight. Basically, we do a lot of work with Morningstar, and I'm sure we can talk to kind of the joint arrangement we have between morningstar.com.au and Sharesight, but just here to talk about Sharesight and the tax features that we have for you, basically.
Yeah. So this is great. So obviously, I think because we talk about it a lot, people should know that as a premium subscriber, you do get access to Sharesight's investor plan. So that is 3 portfolios, unlimited securities, and we're going to go through a couple of features in Sharesight today, specifically around tax, which is timely since we're coming up on end of financial year.
Yeah.
All right, so let's get into the PowerPoint. And the other thing is we will, of course, record this. We'll put it on YouTube. So if people want to watch again, they can. So we have a PowerPoint. All right, so here we are. So that's Doug with shorter hair.
Yeah, that's what I was going to say. I need a disclaimer. That's my pre-COVID.
Yeah, pre-COVID.
My post-COVID
pre-COVID hair. I actually recently got a new photo taken because the last one I think my wife took like 9 years ago, and it was before I used to be a consultant. It was before a consulting project, and it was literally the night before I had to get in some proposal. But anyway, So here's all the stuff we hopefully have talked to you about. So as a Morningstar customer, you can obviously reach out to our help desk as well as Sharesight's if you have Sharesight questions. And we'll record this and put this on YouTube. So this is Doug's presentation. I'm just going to sit here and, go through the slides for you.
Sure.
So
that sounds great.
Here's a disclaimer. So read that.
Yeah. All right. So I guess what we're talking about here is tax loss selling, which in sort of normal everyday terms is basically looking at the dogs that are in your portfolio and, if it makes sense for you, selling those stocks to basically use that loss, that capital loss, as a tax credit when it comes time to file your taxes. So I won't read out this quote verbatim, but it is a really nice quote from Marcus Padley, who's a well-known stockbroker and sort of commentariat on the markets. And basically, it's what he's talking about here is kind of the dogs that we hold on to for probably too long, right? We all have those in our portfolio. It's sort of one of those things that, as human being investors, we're not really well conditioned to sort of cut our losses. But at least in this case, at 30 June, there is a financial incentive to indeed cut your losses. So use this time wisely. We have 8 days left in the financial year, so I would encourage you to go into Sharesight and just do a quick rank and look at some of those stocks that are potentially throwing up red numbers and consider selling some of those.
Yeah. Nothing I've invested in has ever gone down.
Great.
So this isn't applicable to me, but for the rest of you.
Yeah. So as I said, tax loss selling is also known as tax loss harvesting. That's kind of more of an American term that kind of Mark and I would know. It's more of a kind of a marketing term, but you'll see it referred to as that as well. But essentially, like I said, it's a strategy that investors can use to minimize their capital gains tax exposure by looking at the companies that have lost money in the financial year. So you use losses from one investment to offset the gains made in another. So a couple of things just to keep in mind, as Mark said, this is kind of my personal viewpoint, and at Sharesight, we don't have an AFSL, so this is not to be considered as advice. But some of the rules that you should keep in mind are the fact that long and short-term capital gains taxation rules apply. And I'll show you how to work those out in just a second inside of the Sharesight software platform. The tax entity types will dictate the rules as well. So if this is a discretionary, AKA sort of taxable investment portfolio, that will come with one set of tax treatment. If it's a company account, there are basically no tax benefits. Or if it's a self-managed superannuation fund, there's another set of tax requirements. So just keep those in mind as well. Watch out for sale allocation parcels. I'll show you how that works in practice in just a moment. And then finally, no wash sales. So the ATO basically looks out for selling behavior right up until the 30 June deadline of a particular company. And if you buy that company back again, that's actually against the rules. And they do more and more data mining. So they're looking at transactional data from brokers these days and doing some big data analysis. So they will catch you. And so if you're obviously just selling one stock to only buy it again later, right after the 30th of June, that's against the rules and you'll probably get caught on that. So just keep that in mind. It's called wash sales. Okay,
We did it.
that's it. No.
All right. So we're going to go now. I'm really good. So one of the highlights of me is my inability to share anything. We're going to go and we're going to look at the website, which is exciting, right?
Yeah.
Okay. So a couple of things. So as I said, you do get a subscription to Sharesight with your Morningstar Premium subscription. So when you go onto an empty state page, you'll be able to go to Sharesight and sign up. So basically what you're doing is you are giving them your email address, a password, and those two accounts get linked. If you're a current Sharesight subscriber, you just put in your login, your email address, and your passwords, and they link. So what we've done, Doug has shared with me a portfolio. So what we can do here is we can go on, so I can move around. So I always tell people that it's harder to do this than it looks because we have different stuff on the screen. They have to move
Menus
around.
everywhere.
Yeah, so we're going to Sharesight. I'm going to give Doug control.
Okay.
And Doug's going to show us a little bit about Sharesight and particularly what we're talking about.
Sure. So just to keep in mind, so this is a kind of a sample portfolio that I put together for today. It's I sort of loosely based on real life, so keep that in mind. So I can talk sort of confidently to money that I've lost is basically what I'm saying.
So you're the opposite of me.
Yeah, well, this is a realistic sort of demonstration.
Yeah.
So basically, this is an Australian account, which is important. So you did mention that there might be some New Zealand customers joining in, or perhaps people from around the world. Keep in mind that what I'm showing here is an Australian Sharesight account, and when you sign up to Sharesight, you're asked to set your country. That'll dictate the currency that we show for that portfolio, but also, and importantly for today, all the tax rules as well. So just keep that in mind as I go through this. This account is actually an expert plan account, but basically for the tax functions, it'll function just like the investor plan account that you as Morningstar subscribers have access to. There's no difference in that respect. So what I've done here is I've just put together a portfolio of 4 different holdings. Appen, Illumina, Magellan, and Zero. And just a quick sort of bit of, I suppose, Sharesight tidy up. When it comes to adding new holdings to Sharesight, you do have a number of ways to do this. And really to make the tax reports the most useful, you want to make sure that you have at least the full financial year of history in there. And so you can add trades manually, which is what we're looking at here. You can also import from brokers, or you can import from a CSV as well. And I do mention that just because it's important to have all of your historical trades in there so that you can actually do some of the parcel work that I'm about to show you. The other thing with regards to the portfolio is just keeping it up to date. So we have this feature in here, which is called Trade Confirmation Emails. It's in the Integrations tab. This will basically listen for trades that you make. It'll actually process the contract notes. And so you can actually add an email address that's unique to this portfolio to your broker's confirmation settings. And so anytime you make a trade, your portfolio will be updated. And again, that sort of automates the ongoing sort of tracking of trades and should make the tax time stuff a lot easier. So just a couple of tips there regarding portfolio setup and just ensuring you can get the most out of the software. All right, so with that, let's just jump into the reports menu, and we're going to move down to the tax and compliance section. So I'll briefly just mention that the taxable income report is also useful, I guess, with regards to the overall tax discussion. Taxable income report will show you really all the dividends and distributions that you've made throughout the course of the financial year. So all the reports, you'll notice a date range selector on here. That's very important. When you select the date range, all the data below the page will calculate and display based on what you've set in here. And we have these quick current financial year, last financial year settings that you can look at as well. And we'll break this down by trust income, non-trust income, foreign, and local income as well, complete with all the franking information and all the components as well. So just a quick primer on the taxable income report. So Now, actually, to the tax loss selling or the tax loss harvesting component of today's webinar. So what I'll do is I'll go into the capital gains tax report. And so what we're showing you here is we're automatically breaking this down into long-term capital gains and capital losses. And I'll go through all of the different features on the report as well. Now for today, just to show, I guess, sort of the power of the tool, I'm going to go since inception. Now I realize that that doesn't make a lot of sense in sort of the context of doing our tax, from 1 July to 30 June. But just, for the example today, I'm going to widen this out just to kind of show the power of the report and to get, more data in what is really a sample portfolio. And so the report has now adjusted itself, and we're looking at short-term capital gains, long-term capital gains, and capital losses, right? So what are we looking at? Well, if I just jump quickly back to overview, just to kind of set the scene for this portfolio size and its performance, we're looking at a portfolio here that's got $14,000 invested, and my total return is 24.26% per annum, which is comprised of a capital gain of over 18%, dividends of 6%, and no impact of foreign currency because it's all local shares. So I guess my point here is that on the surface, it looks like we have nothing but capital gains. But this is where the power of the software and kind of doing this, I guess, smartly can actually save you some money when it comes to tax owing. So again, keep those numbers in mind as I go back into the capital gains tax report. So we have our short-term cap gains, long-term cap gains, and then our capital losses as well. You can see I've made some losses in Appen, OzForex, and Zero. At the bottom here, we have a very nice summary which shows you the capital gains on shares applicable for the other method, the short-term capital gains. We have the capital gains on shares applicable for the discount method, which is the long-term capital gains. And then we have a summary here. So essentially, what Sharesight is telling me is that based on the settings, the trades that I've made, I have a capital gain of $747.37, right? But what happens if I actually change some of the sale allocation methods? So this is, if you ever hear the word parcel from your accountant or sort of changing around the parcels of shares, this is really what they're talking about here. So if I open up this menu here, the change sale allocation method, you can see you have two different levels of options here. And you can actually modify the sale allocation methods or the parcels on either a total portfolio basis or on an underlying holding basis, right? So before I make any changes here, I want to just show you something. So if we look at say Zero, right? So I've actually made a capital loss on Zero, even though the stock's done really well over the last few years. Certainly, there's been a lot of volatility, of course, over the last 12 months, and certainly a lot of volatility in Aussie tech as well. If I go into my Zero shareholding, I just want to show you this. So I've just clicked on the Zero ticker, and we've gone down into the Zero page. And this is where you can see the performance of Zero. So I've actually made a really nice annualized return of 85, almost 86% on Zero. And you can see really the reason why. This is my trading history here. So we have a buy trade back in 2013, which would have been pretty early on in sort of the life of Zero. I have another buy in December of 2019, and then I have a sell in March of 2020 when I was getting a little bit spooked as to what was going on sort of globally with the pandemic and how that was hitting small businesses and certainly the local share market as well. So again, just as an investor, I think of my Zero investment as a really successful investment, right? But I'm still sitting on a loss, right? So how do we treat that in the cap gains report? Okay, so let's just jump back into that. And again, I'm sitting on this loss, this first in, first out loss of $64. So because I have sort of a built up history in trades into Zero, and again, this is why it's important to get as much history into the system as you can, this is where you can start changing some of these sale allocations. So if I open up that menu again, and if we just look at Zero, and we change this from a first in, first out basis to a last in, first out basis. So what's that going to do? Well, it's going to take, instead of taking the first shares that I bought and then disposing of those first when I sell, in this case, it's going to take the last shares that I bought and then dispose of those ones first, right? Which matters given the dramatic price change from Zero back in 2013 to what it's trading at today. So if we just change Zero from FIFO to LIFO, and we update, it's going to give me a warning. And that's basically because if you've used Sharesight to actually set and then file your tax, you want to be careful when you change any of this. We do have a lock feature, which I'll show you as well. So that's now been updated. And if I scroll down, you can now see that actually my zero loss has gone from $64 to $644, which has actually turned a capital gain of $700 and change into a capital loss of over $1,600, right? And so often at Sharesight, our customers will actually use the price of their subscription and potentially the price of Morningstar as a tax deduction. Always check with your accountant on that one. But you can see I've actually turned what should have been tax payable into now a tax credit. And in addition, I could even claim, the combination, the value of Sharesight and Morningstar in this case as well. So it's sort of demonstrating that the software can almost pay for itself, if you like, in this case. So,
well, there you go.
Yeah,
yeah. It's free.
Yeah. So if you do have a sort of a decent trading history, and it is in particular a tech name or something that's seen a lot of volatility, and there has been a lot of volatility. It's not just about sort of stocks that have made major losses throughout the year. It's stocks that have had a lot of volatility, and if you've been trading in and out of those stocks, you can probably move these parcels around to take advantage of this. And just to also show you as well, if I just jump into this, and some of the commenters may have already said this, but they'd be right if they did. Well, why don't we just change everything to minimize gain, right? So if we just do that, minimize gain, and minimize gain. So recall we're sitting now on a negative 1,000 something, loss. If we minimize all of our gains, that's now almost a $3,000 claimable loss, right? So again, this is only a $14,000 portfolio. So if the portfolio, is more realistic and sort of matches what you might have in Super, for example, this is pretty significant, swings from gains to losses that you can play with on this particular report. And so again, what I've just done there is I've changed the sale allocation settings at the underlying portfolio holding level, but you can also do that at the top level as well for the entire portfolio. Now this top one, and actually all of this top one here will actually change any trades that come in the future. So just kind of bear in mind as you make these changes on the report. I mentioned also the lock dates as well. So if you click lock date here, it'll basically, Sharesight will lock in the settings that you've used for the time period set on this report. So let's pretend that we're actually doing this for, let's say it's a couple of weeks in the future, we're into July, and we're sort of doing this for the financial year that's just concluded. You'd want to sort of set this up in a way that was most advantageous to you, and then you could lock that down, and you wouldn't be at risk of making any adjustments inadvertently in the future. And you can do that sort of sequentially as the years build up in the software as well. So that's all here in the capital gains tax report. Another feature on this report is within the advanced options menu, and that's losses carried forward. So if you do have a tax loss carried forward from years prior, you can enter those here. So let's just pretend that we've got a $1,200 carry forward loss. We'll apply that. It'll reload the report, and we scroll down, and you can see that I have my losses carried forward here, which is now minus 1,200, which is now applied to the overall tax summary at the bottom. So now that's gone up to over $4,000 in a claimable loss. So we can account for those as well. So that's all capital gains tax report, i.e. stuff that's actually happened, crystallized gains and losses that you've made. If we just jump also in the reports menu to the unrealized capital gains tax report, it's functionally the same report. Couple of differences here. The date range will go to an as at. So instead of a from to, just an as at, because this is all stuff that you actually haven't actioned yet. This is all hypothetical or unrealized gains or losses that you could have made. So, if we're sitting here on the 22nd of June, we should look at this report as well, because these are potentially losses that we're sitting on that we haven't yet actioned that we could also use to increase potentially our tax losses and therefore our tax credits.
And pay for another year's subscription.
Exactly, and pay for, yes, exactly.
We offer 5-year subscription plans, just so people are aware.
Yeah, so that's all there as well. On all these reports, you can download to Excel, to PDF, and to Drive. Even though many investors come to us from Excel, we no problem exporting it to Excel. I do the same thing as well, just because I like to sort of manipulate the numbers in a format that I've sort of been using for 25 years.
In a legal way.
In a legal way.
Manipulate the numbers in a legal way.
Yeah, of course.
Okay.
Of course.
We're going to have to cut that part out, Will.
And speaking of sort of getting proper tax advice and guidance, in the settings menu here, or in the integrations, actually, well, this portfolio belongs to a different account, but in the integrations menu in your account, there will be a sharing feature in here as well. I would recommend that you share access with your accountant. You can actually just enter in their first name, their surname, and their email address, and then you can give them what level of access you think is appropriate. So for my accountants, I give them read and write access. And so when they come to me and they ask me for all the buying and selling that I've done, they have access straight away to the all trades report, which is the first thing to look at. And then they have access to the taxable income, the cap gains, the unrealized cap gains as well. And they can actually make these changes on my behalf, which hopefully should reduce your accounting fees and your bookkeeping fees as well. So yeah.
Just win-win.
That's it. Exactly. Yeah. But certainly it's been an extraordinary year for, again, some of the volatility and, some of the trading patterns that we've seen as well. So hopefully there are some advantages that you can sort of get out of the system, really.
All right, so we've got some questions. Should we do questions?
Sure.
You want me to take over the mouse? I don't know if you have to cover this in hand sanitizer or what. Doug's
Probably
from the eastern suburbs, right? So we need to be very worried about that. I'm supposed to go to Hamilton on Thursday. Not looking good. I'll blame it on you. All right, so we'll go through a couple of the questions. So so we'll talk to Rob. If you get Sharesight via Morningstar Premium, can you still claim the Sharesight subscription portion as a tax deduction? Costs associated with personal tax returns. So once again, this obviously is a tax question, but I don't think you get to double dip.
Probably not.
Yeah, but talk to your accountant.
Yeah,
but I don't think you get to have our subscription price and a theoretical subscription price that you pay Sharesight. But Rob, ask your accountant. All right, so I don't know if we can answer this. Grant, I assume, has a question about the wash sales. How long must you wait before you can buy back a position without it being a wash sale? I don't know. I'm not sure if you know, or we should even say.
Yeah, again, that's one that I would sort of put under the advice bucket. I'm afraid, but I would. I guess if you're asking the question, it's probably too early. That's probably what I would say.
Was it yesterday, Grant?
Yeah. So again, check with your accountant on that one for sure.
Yeah. How about, so you're now our tax guru, which mostly will consist of you saying check with your accountant.
Yeah.
But yeah, so Grant's asking about harvesting tax losses only if you have capital gains to offset. You can carry them over though as well.
You can. Exactly.
So that wouldn't be an offset, but yeah, you can carry it.
And another just a note on carrying them over. I think the ACO does say that when you have the chance to use those carry forward losses, you need to use them. So you can't just keep accumulating those and then like a business might under corporate tax law and then apply those 10 years down the road. So also just keep an eye on that as well, Grant.
If you're keeping most of your net worth in tax losses.
Yeah.
So probably not a great way to go since you've actually lost the money. From our favorite attendees, the anonymous attendee.
All right.
Yeah. So do you need a consistent sale allocation method between tax periods? Do you need a consistent sale allocation method between shares?
No, you can actually chop and change this, I think, from year to year and from holding to holding as well. And I think Australia is one of the few remaining tax jurisdictions which allows you to do this. So take advantage while you can.
Okay.
Yeah.
So Susan does not want to commit. So she wants to know, can you unlock after you have locked?
Yes, you can. Yeah, you'll get 3 warnings in Sharesight to make sure you really want to do this, but yes, you can do it.
So it's not foolproof?
No.
Okay.
No.
I had a guy that was in my fraternity in uni, and he was worried about driving on the weekend when he drank too much. So he would hide his keys and all this stuff. So it's kind of the same concept, right?
Well, in this case, you own this. You own your data. You own everything in it. So what you do is totally up to you.
Yeah. Okay. So you've already answered Sally's question, but Sally asks,
can you give access to your accountant? Indeed, and we would recommend that you do. Also, just regarding accountants, Sharesight has a really good integration with Xero as well. So if your accountant uses Xero, which I hope that they're doing because it's a terrific sort of cloud-based accounting platform, all your buys and sells and your dividends will go from Sharesight straight into Xero. So again, it should make the tax sort of prep, tax mitigation, and tax filing a breeze for you and the accountant as well.
Okay, so I've got an integration question. So Martin saying I have my super fund portfolio set up in BGL. Can I download Sharesight?
Yeah, so as long, in the case of BGL specifically, so BGL being a superannuation sort of tax platform, I believe you can download histories or transactions from BGL, or at least the opening balances. So as long as you can get the data out, you can then use our CSV upload feature to then import that portfolio into Sharesight from there.
Yeah, and those are those three. So remember at the beginning, Doug was looking at the three different ways you can get trades in there.
Yeah.
So it's obviously manually entering them. It is uploading something from
That's right.
CSV, and then
Yeah.
of course direct.
Exactly. And it's not sort of binary once you make a choice. So you can actually upload a CSV, and then you could switch on our contract note feature to have your broker send through those contract notes as well. So it's really flexible in terms of how you can keep those updated.
Okay, so we do get a lot of security questions. So I think this is a good one to ask. So the question is, because I don't want my share portfolio information stored in the cloud, can I operate Sharesight and all its features directly from my PC? So maybe why don't we talk overall a little bit about security? Because I know that we get that. So I don't know if you want to start, and then I can give a little spiel as well.
I mean, basically, Sharesight is a secure encrypted platform. It is cloud-based. And so I would say that just like any cloud-based solution, I mean, there are, it's not foolproof. There are, vulnerabilities just like there are in your bank account, things like that. Sharesight is cloud-based. And so there is functionally no way to use the product without having your data on the cloud. One of the reasons it's powerful and it's relatively low cost is that every time you use it, it's cloud-based, and it's recalculating all the data that it's drawing from our different data sources to give you your performance calcs. With that said, you could use it sort of in the cloud for a time, and then you could deactivate the subscription and then download the data. That would sort of stop the updating process. So that is possible, but fundamentally it is a cloud-based solution, and I would say that just in general, that does come with certain risks, like any platform. That's kind of our stock standard answer on it.
And I think there's two ways to think about this, right? Because there is one part of it that there's certainly a privacy perspective that if somebody could get, I use Sharesight, somebody could get access to my portfolio and see what was in it.
Yeah.
Now they can't do anything.
No.
With it. So maybe let's talk about the other side. Like if you do choose to integrate with a broker, kind of how that works, and would there be any backdoor way into getting into a broker where you in theory could sell stuff?
The answer is no. So basically Sharesight is it's a proxy, or it's a reflection of what you actually have in your various brokerage accounts, right? So we don't transact, we don't store any cash we don't do anything financial. So basically, all we do is read information from the broker. So if you make a trade and they send us the contract note, we're just processing the contract note PDF. There's no way to update anything in Sharesight and have that changed in the broker, full stop. So yeah, again, in the worst case scenario, if you got access to my Sharesight account, you could say, wow, he's a terrible investor, but you couldn't do anything with my information.
Yeah. I'm worried personally. Obviously, people got access to my account. They'd want to front run me because I'm such a good investor. It's pretty proprietary data, my trading. But yeah, I think it is an important question that we do get a lot. And and I will say, obviously take Doug's word for it, but we also looked at this when Morningstar did an evaluation. We have an information security team that went in there and obviously looked at everything Sharesight did, looked at all the third-party audits and everything else that goes on. So I'd be happy to send you more information on that if anyone wants to email me. But security is something we always get, which is certainly understandable. All right, Terrence, SharePoint. Sharesight.
That happens.
SharePoint, SharePoint's great too. I can't figure out how to get anything there, so I send my documents to Shani, and she puts them in SharePoint, and then we can share them. But Sharesight seems to record gross profit, including franking credits. So a way to get the net profit, which excludes franking credits.
The quick way to do that would be to go to the taxable income report, and you can actually just look at the figures in isolation as opposed to the gross. So, but fundamentally, it's designed to include franking credits in someone's return because they are, effectively part of your return.
Yeah. Everyone loves franking credits.
Yeah.
All right. So I think Rob followed up because I did not answer the question correctly, and I think you sent me a note which I haven't read yet, saying that I answered the question incorrectly. So Rob's asking, is Morningstar Premium deductible as a cost of doing your tax return if you're classified as an investor, not a trader? So yeah, I think number one, obviously check with your accountant, but yes, generally it is deductible as long as you're making some sort of profit from the share market.
Yeah, and I would assume there the cost of Morningstar includes in this case the cost of Sharesight as well.
Yeah,
so
exactly.
Exactly.
All right, good question for you. Sally's asking, can you have more than one broker connected to your account?
You can. So just quick couple of tips on setting up in Sharesight. So you want to set up the portfolios as they align with your tax entities. So if you've got, discretionary assets, say in ComSec and NAB trade, between say you and maybe your husband or something like that, I would consider setting those up in one entity because they're a discretionary sort of post-tax. And then you can have any number of brokers feeding into that, right? So if you have, let's say, Sal, you've got a ComSec account, your husband has a NAB trade account, and it's all sort of outside of Super, set that up as one portfolio and then have both brokers feeding in trades into that account. And then do it sort of in Super. You can do a different one for the SMSF. But that's typically how we do it because that will allow you to get the most out of the tax reports because the tax reports will then be aligned with the tax entity and it's all set up that way in our system. And the other thing I would mention too is that you could also do what's called a consolidated view. So you can actually roll all the portfolios up into one, I call mine total wealth view, which looks at performance and value across all the entities or as many entities as you want in Sharesight as well.
Yeah, and it is. I think it's a great point about Sharesight in general, right? Though one of the great parts about it, it's an aggregator, right? Mm-hmm. That, increasingly your life becomes a little more complex financially as you have different accounts, as Doug said, different tax structures, and you do have the ability to aggregate. And then Sharesight has a great feature, as Doug said, where you can aggregate again, right? Yeah. So you can bring up those different tax structures.
Indeed.
All right, Peter. So Peter likes to choose individual parcels to sell. However, it seems to be difficult when there have been share splits, capital returns, and I have multiple parcels of one stock. Sharesight doesn't seem to record these adjustments against each individual parcel, rather against the total holdings.
That is correct. Yeah, so that's an important point, Peter, and it's worthwhile bringing it up. So what we do in the features that I showed you, we have FIFO, we have LIFO, we have minimize gain, we have maximize gain, and then we have the Sharesight default. The Sharesight default essentially looks at all those parcels and it organizes them in a way that will minimize the tax. So in effect, we automate the parcel selection for you, but it's kind of just behind the scenes. So no, we do not have a function that you may have found. It sounds like Peter kind of knows what he's talking about in some of these old school tax accounting software systems where you can literally tick and untick parcels of shares inside, say, your buy and sell history of, say, Telstra to kind of re-amalgamate it in a way that you see fit. The decision we made was basically, well, let's just do that for people. And try to automate it there. But yeah, there are some corner cases, and he brings up here perhaps a split or a capital return, some corner cases with corporate actions where our automated method may not actually get you the most optimal result. But again, it's a corner case, and that is sort of the trade-off of using sort of a off-the-shelf platform, versus kind of going and picking each parcel by each parcel. But nothing stopping you, Peter, from doing that outside of our software. You can download your trading history and do that with your accountant. So yeah.
Okay, awesome. Well, we are out of questions, but we'll stay on another minute to see if we have any other questions. Sure. So what I would say is, obviously, Doug showed off different ways to use Sharesight. So we will send out this recording. So we'll send it out to everybody, I think in our database and everybody who's registered for this webinar. So you will have access to that recording. If you do have any questions, so my email address, mark.lamonica1@morningstar.com, is in the, basically in the registration. So if people have questions, you can just email me directly. Yep. And then, yeah, there is, and I can pass them off to the help desk at Sharesight. But there is, of course, a Sharesight help desk.
There is,
function that you can go to as well.
So if you're inside the Sharesight software, you'll see the little chat bot at the bottom right. I say bot. It's actually staffed by a team here in Sydney. Ask them any questions during business hours. They'll get back to you as soon as they can, or just email us at help@sharesight.com, and we will we'll answer your questions.
Okay.
Yeah.
Well, I think this is good because I have another one of these in 25 minutes. So if anyone's holding on for the double header, we can use baseball analogies since we got another American here. You can join back on in 25 minutes, and we'll talk about the active passive barometer and how to pick funds in ETFs, which may be exciting. We'll see. But anyway, I want to thank Doug for joining us. We're going to do more of these because obviously we thought this was really appropriate, just given the time of the year it is, looking at tax. But I think it'd be great to do other ones where we do sort of deep dives into Sharesight functionality. So thank you guys for joining. Appreciate it. And thank you, Doug.
Thanks very much, Mark. Thanks, everybody.
Any advice in this video is general advice or regulated financial advice under New Zealand law prepared by Morningstar Australasia Proprietary Limited and or Morningstar Research Limited without reference to your financial objectives, situation or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest. To obtain advice for your own situation, contact a financial advisor.